Street in Colombo. And this evening, our guest, we thought we'd have an economist in view of the growing concern of what appears to be the very limited options to the Ministry of Finance in terms of Sri Lanka's debt position. And so who better than a former advisor to the Ministry of Finance? Daniel Alphonsus is with us here today after a previous appearance on Face the Nation. Good evening to you, Daniel, and welcome to Newsline Live.
Good evening. Thank you for having me.
Great pleasure, and actually thank you so much for pitching up here. What are the options available to the current government in terms of public debt?
So let's first define the problem before we look at the options that are available. This year, Sri Lanka's debt to GDP ratio is likely to hit somewhere between 95 to 99%. JP Morgan expects Sri Lanka's revenue interest to be about 60 to 70% of government revenue. We're in a very serious position. And just one more indication of what the markets think in terms of Sri Lanka's public debt situation is that the risk premium on Sri Lankan government debt is the fourth highest amongst emerging markets.
Who are the other three?
The other three are Argentina, Zambia, and Lebanon. So, in other words, markets are very, very concerned about the government's ability to repay its debt. In this context, Sri Lanka has to, I think, first and foremost recognize that it has a very serious problem that it needs to face. Second, it needs to re-establish confidence with the holders of its debt and the people who would be able to provide it with the necessary funds to tide over this difficult time. So we can go through this one by one. Let's start with rebuilding credibility amongst the bond market. So Sri Lanka borrows roughly about $6 billion every year, and a significant proportion of that is foreign borrowing. Of that borrowing, there's both from official creditors like the World Bank, ADB, JICA, the Chinese government development banks, and the government also borrows from international capital markets. So what we mean by capital markets are things like hedge funds, global investment banks, and so on and so forth. So if Sri Lanka is to re-establish credibility with these institutions and be able to continue borrowing and financing its deficit, it needs to demonstrate that it's solvent. How does Sri Lanka demonstrate that it's solvent? Those are basically three variables. It needs to reduce the size of its debt, which is a question of revenue, increasing revenue and reducing expenditure, and it needs to increase growth. So on the one hand, reduce debt, on the other hand, increase growth. How it goes about doing this, there's a range of different measures which we can discuss. Would you like me to proceed?
Please, go ahead.
So on the revenue side, the first and most obvious thing to do is to get as many grants as possible, because grants are free money.
Okay.
So the Chinese government just announced that it would grant around $90 billion. There's $500 billion sitting on the table with the US government. There are a number of other grants as well that the government should take with both hands. So that's one, on the revenue side. The other is, this is not an ordinary time. This is at a time when demand and supply have both been affected. The government really should have the fiscal space to be able to spend and support the economy at this crisis juncture. Unfortunately, it doesn't. Therefore, we can't increase taxes the way one would normally advise a government to do in such a situation. So what I propose is that the government focuses on increasing revenue through things that don't affect, that don't generate a fiscal disstimulus. In other words, don't generate fiscal contraction.
So an example being?
Property taxation.
Right.
If you look at property prices in the Colombo district, they've increased by 300% over the last decade.
Right.
And a significant cause of that increase has been public investment in infrastructure.
Right.
It's only just and fair that the taxpayer is able to capture some of that value. So I think property taxation is one way in which the government could go.
So how does that work to Joe public? Is it on sales?
Sorry?
Is it on property sales?
There's a number of ways in which you could structure it. You could structure it on sales as a capital gains type tax, or it could be an annual tax, as is the case in many countries in the world, like the rates that you pay.
Right.
So that's one. Then the third is basically state-owned enterprises. And there's two ways in which the government can generate some revenue.
Right.
The first is many state-owned enterprises have the ability to borrow, but that isn't being used. And I think that borrowing could help provide a stimulus at this time to help drive growth and reduce that debt to GDP ratio. So for example, the Ceylon Government Railway has a huge land bank which it could use to engage in development. Around train stations you can have mixed developments, and it could engage in collateralized borrowing in order to generate those shovel-ready projects. The other is through leases and through privatizations. If you take the Colombo port and the Hambantota ports, the Colombo port is one of the greatest ports in the world, primarily because in the late 90s, the PA government at the time privatized the South Asia Gateway Terminal and brought in foreign investment and foreign expertise, and most importantly, competition. Then you look at the South Harbour. Again, there was a global ports operator who came in, brought in technology, brought in investment, and brought in further competition. The the JR Container Terminal and the Unity Container Terminal operated significantly lower levels of productivity than the private sector terminals. They can be leased out on 40-year, 50-year concessions. The East Container Terminal has been dragging for years. And I think it's not only, and these are just examples I'm using for the public sector as a whole. If you take the aviation space, we don't have one of the great airports of the world. Why? Because we don't have a Colombo South Harbour in the form of Katnayaka and an SAGT in the form of Ratmalana Airport competing with each other.
Right.
And then finally, let's move on to privatizations. Here's just a quick list of the assets the government of Sri Lanka owns. This is from the Ministry of Finance mid-year fiscal report. We have Bank of Ceylon, People's Bank, National Savings Bank, State Mortgage and Investment Bank, HDFC Bank, Sri Lanka Insurance Corporation, which also controls the Lanka hospitals, the Ceylon Petroleum Corporation, Sri Lankan Airlines, Airport Aviation Services. This list has about 52 entries.
Right. This government has sort of made it one of their central to their policies is that they will not sell off the family silver. How does one fit this advisory with their political?
I think there is some realization that that is simply A, not good policy, and B, untenable. If you look 2 or 3 months ago, the government announced that it would be selling 49% of a company that would basically own the Grand Oriental Hotel, the Hilton Hotel, and some other assets. So I think this false dichotomy has been created that the current government will not engage in selling, as you call it, the family silver. The objection I have to even that term of the family silver is unproductive assets are absolutely useless. We're starving the children, preventing them from going to university or not being able to finance them to go to university while keeping our heirlooms in place. Heirlooms that aren't necessarily particularly valuable if they're just sitting there, they're unemployed. So
you need to turn them into working assets.
That's right, and I think that's the great tragedy of Sri Lanka. If you take the Trincomalee oil farms, we've kept on calling them sort of crown jewels of sorts, but in 70 years, except for the 10 or 15 oil tanks that were leased in the early 2000s
to the Indians,
nothing has been done with them. We've been sitting on them and they've been completely useless to us, and it's tragedy that's become fast.
Right. So what are the options, and what do you think that a government with this sort of political ideology will opt for, and how will that affect the public?
So in some sense I'm a Marxist, and my view is that the political ideology will change with the economic structure changing. And I think there will be a realization in the fairly near future that the political ideology will have to change to meet the facts.
Right.
And that will be, I think, a default will be the trigger event if such a default event takes place.
You talk about a sovereign default.
I'm talking about a sovereign default. So look, what happens when a sovereign default takes place? The government either makes a late payment on some of its international sovereign bonds, it extends the maturities, it says it's not going to pay the full amount or something like that. Any change in the contractual terms of the bond agreement.
So a deferment or a reschedule, what most
anything is a default, is a credit event. And what happens when a government defaults is that it loses access to credit markets. That means of that roughly $6 billion the government is borrowing a year, suddenly it won't have people lending to it. Mm-hmm. So then what does it do? Because of course it can raise some money from the EPF, some money from the state banks that are captive lenders, but it's not going to get your $6 billion. So what could the government do? It has two options. One is to cut expenditure, the other is to print money. And when it prints money, we all know what happens. You have inflation, you have a massive rise in the cost of living, and ultimately, because a significant proportion of Sri Lanka's debt is in foreign currency, the debt to GDP ratio will still probably rise, despite a default. And cutting expenditure, about 80% of Sri Lanka's, the government's expenditure is recurrent expenditure. And there, again, the significant component that's not interest is salaries.
So, in short, the civil service is too fat. We need to make it lean and mean.
So, I think it's government employment as a whole, not only the civilian, but also in the defense sector.
Right.
Sri Lanka has been, one, putting off very tough choices it's had to make for some time now, and secondly, it's been exacerbating the situation. So let's just start with the civilian side of things. It took 40 years for the Sri Lankan public service to double in size from 1968 to 2008.
Right.
Then it doubled again in just 10 years. What productivity gain have we seen from that? It's very unclear. And government salaries have been rising significantly during that period as well. On the defense side of things, the war ended. In almost every other country in the world, after a war ends, you see defense spending decline. In Sri Lanka, not only did defense spending increase in rupee terms, but as a share of GDP, it's higher than at the war's peak. It's 2.4% of GDP. This is just not sustainable. And if you look at it in terms of manpower, we have 280,000 men at arms. This is the 29th largest army in the world, even though we are the 89th largest country in the world by population. Not only is this does it account for 40% of government salary expenditure, it's a serious pension liability, and I think the most serious concern I have personally is that it means that some of our most able-bodied citizens are not able to contribute, and disciplined and capable citizens are not able to contribute to the economy, which is the key priority at this juncture. So the solution, I think, for us is really what most countries do, which is have a reserves.
So you don't have a full-time, but you have a reserve armed force.
So you have 60% of your army roughly full-time, and you have about 40% in the reserves. So that means they have their jobs and are able to contribute to the economy, but they take 2 weeks plus a few weekends for training and are ready to be mobilized in the case of any security threat. What's unclear to me though is what security threat Sri Lanka faces requires 280,000 men at arms. The security threats that Sri Lanka faces require intelligence, require capital investment, and these are all not possible when 80% of the defense budget plus is being spent on salaries.
And that is probably the biggest question, whether any government realizes that having such a huge defense force is necessary, and the impact it's causing to the economy.
Indeed.
And on that note, we'll go for a short break. Don't go away. After all, you're tuned.
Newsfirst Newsline with Faraz Shauketaly.
And welcome back to Newsline Live. We're in conversation with Mr. Daniel Alphonsus, who is, of course, a former advisor at the Ministry of Finance in Colombo. Now then, we've got some questions. One of them is, this one that's just popped in, is from a viewer who is watching us from the United States, from Texas. It says here, while Sri Lankan Airlines are in heavy debt, is it viable to allow other airlines to emerge out of Colombo? How will that affect?
So the question the viewer is asking is, should other airlines be stopped from flying into Colombo?
I think the viewer is really asking whether we should impose some form of protectionism
on the airlines.
On the airlines. And what impact is that going to have on free trade and so on and so forth?
So I think at this juncture, what's really keeping Sri Lanka afloat significantly is our export industries. And what's absolutely critical for our export industries is having as short as possible lead times from one destination to another. In other words, from Sri Lanka to our European and American markets. The more flights we have, the better. The more connectivity we have, the better. And I don't know the internal structure of Sri Lankan Airlines' cost structure and how it looks in the current environment, so I'm not able to comment on substituting Sri Lankan Airlines, substituting foreign airlines for Sri Lankan Airlines, but it doesn't seem like a viable prospect to me, because what it will involve is even further losses generally on the part of.
So then, of course, the question would arise, does Sri Lanka need Sri Lankan Airlines? Can we afford to have Sri Lankan Airlines? Or put it another way, can we afford not to have Sri Lankan Airlines?
I certainly think we can afford not to have Sri Lankan Airlines. Sri Lankan Airlines, since the Emirates sold its stake back to the Sri Lankan government after that whole fiasco, has been running massive losses, as everybody who's watching this show knows. What has the taxpayer got out of that? I would submit nothing but liabilities. If there is a need to subsidize a specific route for a specific tourism or export related purpose, the government of Sri Lanka can subsidize that with another carrier. That could be a Sri Lankan flagged private carrier, or it could be an overseas carrier as well. It's simply not worth the hundreds of millions of dollars that the taxpayers of this country are spending on this vanity prestige project.
And it is actually a vanity prestige
Nothing more and nothing less.
And there are claims to say that that is the same of the Hambantota Port and of Matale International Airport.
The Hambantota Port is no longer that. Whatever it may have been in the past, it was leased to China Merchant Holdings. The government more or less recovered what it spent on it. China Merchant Holdings has been transforming the Hambantota Port steadily since it's taken over. It's becoming a viable port and contributing to Sri Lanka's economy. So the Hambantota Port, I think, overall, ultimately has worked out rather well for Sri Lanka. The precise terms and all of that, we can quibble about. The Matale Airport, on the other hand, has again been $220 million plus interest payments down the drain with no economic return whatsoever. And that's partly why we're in the debt situation that we are in today. Because we've borrowed on short maturity debt in US dollars, high interest rates, and invested it in projects that are not viable.
And you can send your questions by SMS only, please. 0772 300 305. Has Sri Lanka, as of today, borrowed far in excess of what the government banks were able to guarantee?
Right. So when the government of Sri Lanka borrows, it generally borrows through the treasury by issuing bonds and bills, treasury bills and treasury bonds, and those can be denominated in US dollars and those can be denominated in rupees as well. The state banks also engage in borrowing, but there is no explicit guarantee or no legal guarantee from the treasury unless specifically provided in the form of a letter of guarantee to other government organizations that the state will repay that debt. So for example, when Sri Lankan Airlines borrows, it comes to the Treasury and says, can you give us a letter of guarantee, because otherwise our interest rates are going to be much higher.
And all this looks like it's very gloomy.
Yes.
And not all of it is to do with the current pandemic.
No, this is an issue that I think has been building for a very long time now. And the two bits of this story, and the two critical years to keep in mind, are 2004 and 2007. In the period 1977 to 2004, governments, regardless of what color they were, green or blue, engaged in some serious structural reforms, including the PA government, the SLFP government from 1994 to 2002. You saw the first free trade agreements, the Indo-Lanka Free Trade Agreement, the Pakistan Free Trade Agreement happened during that time. You saw the SAGT, as I mentioned earlier, the port terminal being privatized. You saw telecoms being privatized. You see competition coming into the economy. That period, that bipartisan consensus to keep improving Sri Lanka's competitiveness, to keep the reform process going, broke in 2004. And that has meant that our real growth, our real productivity growth has been declining. From 2012, our growth rate has been consistently declining, because around the period 2009-2012, we had a bit of a sugar high with the end of the war and the massive borrowings that started in 2007, which is the second date. Remember 2004? 2007 was the other date. 2007 is the date Sri Lanka started issuing international sovereign bonds. Basically, we became an upper middle income country, we got access to bond markets, concessional lending also fell, and we went on a sort of, we went into the sweet shop and gobbled up as much debt as possible.
Right.
And then spent it rather poorly. So as a result, these issues have been brewing for a very long time. And I think they're coming to a head as a result of the corona crisis, but it may well have happened a couple of years later without the corona crisis as well.
And thank you for your questions. I'll take this one. Senior citizens are struggling with low interest rates on their deposits. Does Daniel predict interest rates dropping even further?
I haven't thought about this question, but I think it'll depend on the government's appetite or stomach for inflation. The government has reduced interest rates significantly, as the viewer mentioned, but if inflation starts creeping up, it'll have to make a choice on whether to increase interest rates and reduce inflation. What that appetite is going to be mixed. On the one hand, the government will want some level of inflation to reduce its debt, because a significant proportion of government debt is denominated in rupees, and that helps reduce that. On the other hand, if the cost of living rises, that affects all citizens. And so that's also the government's obviously concerned about the welfare of the public, and will be reluctant to allow inflation to be too high. Mm-hmm. So it's a tough call.
And another one, I think I won't take any more because we're coming towards the end. Shouldn't the government of Sri Lanka be focusing on tea and tea estates? It used to be rather significant revenue for Sri Lanka.
I'm so glad this viewer asked the question, because it's something I want to talk about on the structural reforms required to increase growth. We talked earlier on the show about how to reduce debt, but now how do we increase growth? I think agriculture policy is fundamental for that. If you look at the last 20 or 30 years, basically since 77, you see increases in the productivity of services and increases in the productivity of industry. Agricultural productivity, despite huge amounts of government aid, assistance, loans, massive schemes, has been more or less flat. And you see that in the tea industry as well. The tea smallholders, so when the Bandaranaike government, the Sirimal Bandaranaike government in the 70s, took over the estates, nationalized the estates. Some estates were kept in state hands and leased to the regional plantation companies.
Yeah.
Some were then given to tea smallholders as freehold land. Where there were smallholders, there has been a significant, the productivity is much higher than with the large plantation companies, partly because of the structure of their lease terms and so on and so forth that discourage replanting. But what I think can really transform the tea sector in this country is for the government to give the land freehold to the workers and the villagers around the tea estates. That will automatically reduce poverty. As everyone knows, the estate workers in this country are some of the poorest people in this country. What's less well known is only a third of them own land, unlike about 80% of the other communities in this country. So that would significantly reduce poverty, and it would increase productivity because they'd become tea smallholders and be able to borrow.
Unfortunately, Daniel, we've run out of time. It's time now for the primetime news on TV1. But thank you, Daniel Alphonsus, for popping in and sharing your thoughts and views with